What's up, everyone? Grizzle Live coming back at you. Today, we're talking about WallStreetBets. We're on the hunt for the next YOLO trade. And then we got to talk about natural gas because we're all freezing out here. And we also got Peloton. How are they able to issue debt for free, basically? So that's what we're talking about. Thanks for being with us.
Yeah, guys. Yeah, that's the agenda. We got it on. And if you were fortunate enough to listen to our first podcast, that was fun, Scott. We were just like rapping.
Yeah. Some good topics. There's always something to talk about. And since it was the first one, if you don't know our background, we laid it all out there for you.
Exactly. So that's on YouTube, Spotify, and we're waiting for approval from iTunes. Whatever. I think that takes a few days, whatever. But that goal is to put that out every week. So, guys, what is going on? We got a jam-packed agenda. Lots going on, Scott. Man, it's crazy. Oh, and let's not forget about pot stocks, man. Still going. Things are happening.
That's a trade that keeps on giving.
Yeah. So Afria is up. So interesting today, Scott. Afria was up 13%, and Tilray's up 2%. So what does that mean? Explain that to everyone. What does that mean?
I hope you were here last week, everyone, to hear about our merger arbitrage. We talked a lot about it. Remember that Tilray and Afria are merging. So what this means is that spread between what, so remember, Afria is going to get shares of Tilray. So if you own Afria now, your shares are going to turn into Tilray shares. So what that means, if Afria is doing better than Tilray today, it means that the spread between what you're going to get and how the market is pricing Afria today is shrinking. So that's what you want to see, because if the deal closed tomorrow, there'd still be big upside in owning Afria. And that's going to close over time. Once we get close to when the deal closes, there should be a very small spread, like 2%. I think now there's more than 30%.
Yeah. And looking at the MSOS, which is shout out to the MSO gang, hashtag. But yeah, the MSOS, which is the advisor shares pure U.S. cannabis ETF, Scott, that's up 2% today. So that's not shabby at all. Quite good. And these guys are not that far away from $1 billion, Scott. They literally, if memory serves me correctly, they launched this back in fall. Early fall.
It wasn't that long ago. I remember.
Which would be a rapid ascent for that, and well done. It's provided access. Also, what else, guys? We're just going to cover a little bit of pot before we get into natural gas. But Scott, what do we got going on with Verano? A lot of people, Verano. What is this? What's happening, Scott?
That's the hot stock because it's new to the market. You've never been able to buy it before, so everyone's like, "Give me some."
Yeah.
So I think that's coming public tomorrow. Is it? Let me know exactly the date, guys.
And correct me if I'm wrong. Sol has an ownership there. How does that all work? I think Sol Global has an ownership there.
Sol sold Verano something, and I believe they got Verano shares for it. So that's how they're tied together.
There you go.
Yeah. So as Verano goes up, the value of Sol's stake in Verano goes up.
Which basically you can actualize the NAV, which is always the tricky thing with these companies that bring together different assets, because they always historically firms that have different pieces together, they trade at a discount to NAV, and that's always the challenge. But if you have things that are freely traded, then it's easier for people to look through and value the underlying company. So there's that, Scott.
There it is. E-Rock's got it. So it's tomorrow on the CSE.
There you go. Big day. That should be fascinating. And and so just when you think about companies that are, let's call it holding companies that have different pieces to it, Scott, typically there are a lot of private pieces. Maybe there's some public ones. These are very common in Asia. Okay, so I started with you basically had these big holding companies at the top, Scott, and they would have all these other companies below. But you know what? And they would all be publicly traded. But guess what? The holding company was always trading at like some 80% discount to everything it held, and it was trading at a 20 or 30% discount, so it was only trading at 80% of the full value of all the pieces underneath.
Yeah.
And so they were always like, oh, we should sell this, dividend it out, because you have to, like, if there is a discount, you have to do something to initiate contact, if you know what I mean. Otherwise, that discount will stay forever. And with these Hong Kong companies, it stayed forever because it was Li Ka-shing's empire.
That's
right?
like an analyst's favorite research piece. They love doing it's called Sum of the Parts, everyone. They love doing Sum of the Parts. Be like, oh, they got 3 businesses. They're worth $1, $1, $1. So $3. Stock's only trading for $2.50. Oh, so much upside. I love doing that.
Oh man. What else? So Scott, so that's cannabis. Are we missing anything? Obviously, big shout out, friendly. MSO gang meet, MSO Tang. We're all friends.
We're all making money in cannabis. It's all good.
No, it's all good, man. Gotta keep it fun, gotta keep it spiritual. Shout out to Todd Harrison, who's done a lot in the pot space from early days.
He's been one of the OG advocates for sure.
OG advocates. And a gentleman. So listen, guys, peace in MSOS land. MSO land. Peace.
Make love, not war, everyone. Come on.
Put down the guns. What else, Scott? That's cannabis. It's always rough and rowdy in cannabis.
I don't know, man. I'm freezing a little bit over here. I want to talk natural gas.
Oh, hey, did any firm call natural gas? What firm called natural gas this year? I can't.
No firm calling it in January, as far as I could tell. Only one firm.
Ooh,
guys,
Grizzle,
if you don't know,
miss.
Grizzle don't miss.
Oh, you know what?
We're about to show you.
Our record in energy is untouched. You know what? A lot of people don't know. Scott and I, we cut our teeth in resources, in energy specifically. So it's just kind of, it's like leg day or something like that for Chamath. You know what I mean? You don't do it enough, that shit, you lose all your muscle, man. You got to fucking
But it's great. We can just dive back into it. So, like, back in January, if you watched the Grizzle Live, we covered natural gas and some of the stuff going on then and just dipped a toe back in, picked these stocks, worked out well.
Exactly, man. Big hat tip to Nacho and Scott. You know what, you guys? We were like, okay, listen, we're gonna get constructive here on natural gas. It worked out very nicely, and we picked 2 companies that worked out very, very nicely. So there's that, guys. Big love to everyone on YouTube land, up in Twitter, guys. Please smash that thumbs up. Hit that subscribe, do all the things that you guys can do to be friendly. Guys, on Twitter, please a retweet, man. Let people know we're grinding every day. Scott, what's our motto? Until we're all free, we're sticking here, man. We're locked down with you. If
you're in your basement, we're in our basement. I can guarantee you that.
Yeah. So, Mr. Jersman, can we talk Sierra Metals, copper? Listen, copper's mooning, Scott. I think we'll do a show on that tomorrow. So let me save some thunder there. But all things equal, I think it's a good setup right now for copper. We're at all-time highs, and there's inflation. Let me just pull up the Sierra here. Just there we go. Yeah. But yeah. Let me. What we'll do is we'll figure out bits and bobs here. And yeah, we'll have an update on all the key bits in copper. But listen, it looks like there's a little bit dip there in Sierra, but all things equal, copper is the place to be. We've talked about that since mid 2020, Scott.
That was for a while.
And we postulated that as the catch-up trade. We identified Sierra, we identified the opportunity set in cheap assets that were real assets, right? We're not talking about space age sci-fi, Scott. So
no satellites, no colonizing Mars. This is stuff that's in the ground.
No. So Scott, let's revisit the natural gas story. We highlighted the opportunity back January 13th. Actually, the tweet is out. I retweeted that. So everything we do, guys.
Timestamp.
We timestamp everything because we're here with you every day. That's how it works.
Yeah, if we want to see what we said, we just go back to the tape, re-roll the tape.
Guys, I picked a stock 5 months ago. Didn't tell anyone. I'd like the timestamp. Then it doesn't work like that, Scott. You have to be there to get the timestamp. And basically, our entire role here is the timestamp. So we did that January 13th. You can find the episode on YouTube, the tweets, all that stuff. So since that time, natural gas, Scott, we got that up there. Natural gas is up 11% and change. That's very good.
Yeah,
in commodity land, you'll be very happy with that. Very happy with that. Now let's talk about the thesis, Scott. The thesis was very simple here. Well, not very simple, actually. We highlighted the
Tell them
opportunity.
the catalyst that started this all off. Why did we talk about this in January?
Oh yeah. So basically we were talking, and I've covered electricity utilities for a very long time, and along with natural resources. So I kind of know the signals when things are getting tight. And so what we had it back then, where we were seeing electricity prices, Scott, in Japan and the UK spike. Right? No one else on Twitter is like actually putting it all together and saying, listen, you need to go long. Obviously, those who are specifically in energy, but we were saying, listen, if you're a generalist, which we are, and the term for generalist is guys that are playing in multiple sectors. It's okay, corral, man, shooting everywhere, and we're shooting with the laser gun in the sense that we're not out there with just an elephant gun, Scott. We're out there.
We're not painting with the broad brush strokes, We're going lasering and figuring out where the trade is.
Totally. And so we were saying, listen, I'm going to quote it. Tweets out there. Timestamp. Global electricity markets are sending us big signals. Extreme price spikes in electricity, Scott, were happening in Japan, in the UK. This is bullish for natural gas on a global scale.
Doesn't that speak to spikes in electricity, speak to potential shortages in natural gas?
Exactly. And see what's happening right now. We are seeing spikes in electricity prices across Texas. The awful storms there, debilitating. I think last count was over 5 million people, Scott. No joke.
Wow,
and now that's causing blackouts in Mexico. Why? Because no natural gas for you, Scott. This commodity that was just getting kind of pushed over. We were talking about it. We were always of the view natural gas was the energy commodity that was getting unloved, has tons of green properties, and people are talking about everything else under the moon.
Yeah, everyone's talking about renewables and solar and everything, but this is the real green. This is the first step towards a green future. It's natural gas first, and then it's all these other aspirational energy sources.
Yeah, like one thing Grizzle is pragmatic, right? Scott, like we're not of the view of like, listen, you can just hop over 5,000 steps and get to a magical place. There are steps along the way.
Yeah, it's too difficult. You can't just go to everyone has a little like turbine in their backyard powering their house. You got to do steps between that. Maybe you go dirty coal, then you do oil, then you do cleaner gas, and then you end up solar, and then you end up with the wind turbine or something like that.
Yeah, you know what I'm going to do, Scott? I got a fantastic graph. So I ran a sustainability fund, one of the first sustainability funds in Canada, run by the big banks here. So it was a big, literally launching that fund was pushing a boulder up a hill. But I talked through this. I said, listen, this is how it goes, right? But it was a graph going back hundreds of years, Scott, right? So you go back to caveman, they were using predominantly all their energy source was wood. Then, you go a couple of hundred years ago, we discovered coal and all that good stuff, right? So with each one of these advents, Scott, you know what has happened to pollution, air grade pollution within cities specifically? It has kept falling and falling. So after coal came natural gas, right?
Yeah.
So which is, you don't need to be, simply put, we should ban coal globally. Right? If you are on the right side of the environment, you need to be on the right side of banning coal. Fuck clean coal.
Yeah, you can't just be like hydrocarbons dead, because it would be a huge win for the planet if we can just get rid of all the coal and switch to natural gas, just as a first step. If we could get there, that's amazing for pollution and greenhouse gas emissions and all that.
Oh, totally. And that's where people need to figure out, right? They need to figure out what's going on. And so bottom line is people need to figure out what is going on in terms of just this bigger picture. We are not going to leapfrog into a future time that is far more expensive, right? Right now, the subsidies that will be needed to make wind and solar competitive, truly competitive with natural gas are very large. And Scott, that does not even include, which is critical, which has always been the challenge with renewables. And listen, I started a sustainability fund. I know
He's a
where
believer
we
of renewables. Let's start with that. He's not a hater on renewables.
no, not a hater at all. And what you understood really quickly is that renewables, while fantastic, can only be X percentage of the grid at max, right? Maybe 15, 20%, maybe you can push 30, Scott. This gets very, very tricky. And you know who is managing all of that? The grid operator, right? And so the way you got to think about it is that you've got these highly variable sources of electricity coming through, and then you need something to stabilize the entire grid, right? You need an energy flow that is always available. Surprise, surprise, what is that? It's natural gas.
Yeah, because everyone thinks the solar sounds so nice in practice. Oh, I can run my whole house off solar. I'm not polluting at all. But for people who don't live in Arizona, if you have a cloudy day, the energy from that solar goes way, way down, right? That's what they don't tell you about solar. It's depending on clouds and how sunny it is, the power you get from your solar panels could be like this. You could be having blackouts in your house all the time. So it's not so simple. You need that whole storage, which is a whole nother story, and increases the cost. So they're still figuring out the whole storage angle. We're still early days, and you need the renewable, the energy itself, and then you need a way to store it.
Exactly. And so bottom line is, big picture here, guys, I'm just really giving you guys the big thesis here because I think it's critical, right? When we talk natural gas, you got to give the big picture here. Natural gas is the commodity of now, and it's the commodity of fixing global warming. Full stop. Yeah. Okay.
People will wake up to that if they haven't already. More and more. That's why we like natural gas.
More and more. Exactly. Scott, let's pull up our two calls.
Yeah. So these are what we said to buy in January.
Yeah.
So
this is what we talked about.
This is your,
right?
You picked ARC, right? And then I had Range Resources.
Yeah, and hat tip to Nacho, man, because well, I've owned ARC Resources in the past, but you know, Nacho we trust on Twitter. This is why Twitter is so great, man. There's some fantastic resources, great people, critically, Scott, great people that are in the industry. You know, you could just be like, and you know, everyone's cool. If you're cool, everyone's cool, and that's why you got to keep the peace, man. Everyone's got something to put in the pot, man. Once you think the pot is only you, well, then you're in trouble. Right? So ARC Resources, and Scott, yours was Range. Am I right?
Yeah.
Okay. So here we go. So this is from January 13th. Again, we're using Y charts. You do this stuff very simply with Y charts. You put end start dates. It's beautiful work. So basically here, Scott, we put our two picks against you could have been in the S&P 500, Scott. That's a typical place to be parking your money. Or B, you could be in the Energy Select ETF, which is the big one, right? That's the XLE. Yeah. So that's the big energy ETF. So when we say, listen, we got to pick an energy, well, you sure as hell be benchmarking it against what you think people will be pulling money out of, or, you know, typical benchmarks. And our benchmark here is A, the index, the energy index, and B, it's the broader market.
Yeah, so we don't look at it in a vacuum. We're not just saying, oh, it went up or it went down, because really you're always competing against some other thing you could be invested in. So that's why we always look at an index. There's always a benchmark you have. That's the real way to look at whether you're beating, whether you're doing better or worse than the market.
And yeah, and this is the way we'll always show it, right? And so whatever it is. So if Scott's picking technology stocks, well, I kind of want to know how the Nasdaq's done, right? You can't be like, hey, I'm up 40% and the Nasdaq's up like 50.
Yeah, I'm not giving you great advice then, right? If I'm saying buy this stock and then it's up less than the Nasdaq, not good enough.
That's right. So critically, Iraq, love that tag. There we go. Grizzle fam, guys, everyone, thank you very much following us. No doubt. So guys, anyways, the picks have done well. We're just saying, listen, you can keep riding those horses. We're living in a new era, a natural gas era. That's the natural gas call. Guys, what up to everybody? Zaga, Grizzle fam, Jay, Mr. Dursman, what's going on? Alex, everyone here.
Great to see you. Great to see everyone.
Woo! Yeah, guys. Hopefully everyone's doing well. Listen, if you guys are enjoying what we're doing, we're dropping the heat. Hit that retweet. You know what to do. And up on YouTube, guys, please, let's get that thumbs up higher. Thumbs it up. Subscribe it up. Thank you, guys. Appreciate it.
It's like that game at the carnival where you hit the hammer and you try to get it to go ding. Those likes,
Boom.
pumping it up. It's getting close.
Let's go. Let's go. Yeah, guys. You know what? This gets us going, man. Scott and I prepare a lot in the morning to get all the bits ready. Put a show that's meaningful for you guys.
Not superficial. We don't want to just like blah, 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 blah. We want to actually give you picks, give you thoughts on the market, real like what's happening out there so that you can make better decisions at the end.
Critically data. That's we're data orientated. If so, I like the podcast because it's still based on data, but it's more conversational. Nothing that Scott and I talk about or do is never grounded in some form of data, right? I just, and that's the difference between amazing investing and casino, right?
Yeah.
Scott and I were just shooting the shit. Listen, I like this. Tell me why. And it can be a speculative nature too, but you need to show data. And Scott's been phenomenal about how, we're living in the Wall Street's bets era. Well, Scott, I think you have some of the best Wall Street bets data, right?
Oh, yeah. Yeah, if you want to follow on to those guys, I found all the sources. And, we talk about it pretty regularly, but going to mention it again today.
Yep, exactly. So, guys, thank you for all the love here. Yeah, man, we'll keep grinding. Scott, so what do we got? What's next on the agenda?
I mean, do you want to talk about Peloton maybe? How they were able to issue debt for free?
Yeah. Or do you want to do the Wall Street bets kind of? Yeah, let's do the Peloton. Whichever one you want to do.
I'll do Peloton quick because I'll show you guys how the pros do analysis on whether to buy a bond or not. Just a kind of quick little thing, and then we can get into Wall Street bets. Some targets that we like.
Good.
I'm going to show you the math on how this works.
Great.
So Peloton announced that they were raising, I think, $600 million, something like that, in a convertible bond. What a convertible bond is you lend someone money like a normal bond, and they pay you interest, but you get a little kicker because if the stock goes up high enough, your bond will convert into shares of the company, and then you just own shares. So it's basically like a bond with a little bit of juice. And the reason you can get that is it's companies that aren't big enough and stable enough to just do debt. The people that give them money for the debt say, we're basically only going to do it if you give us that little equity kicker, because that's what we're here for, right? The debt is a little secondary. But what Peloton did is they issued debt and they're paying no interest on it. So it's like if you gave them, they said, I need $100, and you gave them $100 for 5 years, they're not paying you anything. They'll just hopefully give you your $100 back in 5 years. That's basically what this is.
So it's a zero coupon bond.
Yeah. Which I don't know, in my career, which is 15 years now, I haven't seen a 0% convertible bond, but that's the world we live in now. I don't think this will be the beginning. Or it is the beginning. It won't be the end.
Yeah.
But so I'll explain to you, their investors are getting something, right? Because they're not just giving Peloton $600 million to get $600 million back 5 years from now. That's a pretty terrible deal. So here's the math on how it works. So there's a convert function attached to the bond. So let's call it a warrant. That's basically how a warrant works. You have 3 years. If the stock goes above a certain level, it converts. So I threw it through the option calculator, and these warrants right now for Peloton are worth $80 each. Now, if you give Peloton $1,000 of debt in this deal, you got 4.18 of those warrants. So you do your $80 each times 4.18. The value that the bondholders are getting is $334 for every 1,000 that they give them. Wow. So this is the way to think of it. The yield they're getting over 5 years is right now 33.4%, which seems pretty good. But now you have to adjust it because, remember, they're not getting any interest rate. So right now, interest rates on other companies with a similar risk to Peloton are like 3.5%. So you have to take that off because that's what usually they should be getting as compensation from Peloton, but they gave that up. So you take that off, and then you divide by 5 because this is over 5 years. So basically, if the people that are participating in this, with the upside they could potentially get from the warrants, the implied risk that Peloton defaults, they're getting 3.1%. So what you need to look at is you see CDS implied risk of default, that's 1.3%. So let me show you the chart on this. This is the risk that Peloton defaults, how the market is pricing it over the next 5 years. So it's only a 1.3% chance they think Peloton will default. So Peloton's not very risky. But with this bond, if you buy this bond, it's pricing in a 3% chance of default. So, which means you are getting somewhat of a deal. Because, yes, there's a risk that Peloton defaults and you're getting no interest. So, you get no offset for that risk, but you have your warrants, which can make you a lot of money. So, Peloton would have to increase 150% for you to end up with your warrants being worth 80. But if they can do that, the risk of default is offset by the upside in the warrants. So that's why they were able to get this deal done. Even though it looks like you're giving them free money for 5 years, you're getting some potential value if the stock keeps running and it's priced better than the current default rate in the market. So that's why people gave Peloton money at 0%.
Guys, that's a masterclass Scott's dropping
Like
right
this is how, if I was putting
Oh.
millions of dollars in the deal, I would have done this math and say, okay, the market's pricing in 1.3, I'm getting 3.1. I think that's fine. I'll participate in Peloton.
Fantastic, man. Fantastic. Scott, that's great. Hey, Scott, do you want to do Palantir? Were you going to touch on that? Maybe we do that before the Wall Street bets. If you had a quick,
I'll do that quickly.
Yeah, do that one quickly, guys. This is a massive. So, Scott, is just on this Peloton before we move away. Is this what MicroStrategy? They just announced a bond deal. Is that similar as well?
Yeah, it has to be the same thing because they announced a convert too. So you have to look at what's the upside if MicroStrategy's stock price keeps going. And for MicroStrategy, they are Bitcoin. So you're like, if Bitcoin keeps running, then I like this. It's basically a convertible bond with a Bitcoin kicker, isn't it?
Fascinating. Cool. It really is just like it's kind of the company is turning into a Bitcoin holding company, but you're paying a premium for Bitcoin and you got this whole business on it. I don't know. Like I get that he's an evangelical on Bitcoin, but I'm still confused on how I should value.
He's just doubling down, man. He's doubling down on doubling down.
Yeah.
As Bitcoin goes, Michael Saylor and MicroStrategy go.
Oh, there we go.
Mr. Dursman, don't sell yourself short. I think your IQ went up at least 10 points.
Yeah, man. Yes, guys. Always grinding here. So the Palantir, Scott, it's down.
Yeah, let's look at the pricing. So this is how it's running this morning, down 10%. It was just one of those things. That was a WallStreetBets runner at one point. It's been kind of a beloved tech stock recently since it IPO'd. So it just missed expectations a bit. Here, I can maybe zoom in on this to show you their earnings. So where I think they disappointed is, so they did $322 million in revenue in Q4. And the market was looking for like 305, so they beat there. But then if you look at outlook, this is what always matters. It's the outlook. So they're saying for next year, for this year, 2021, they think they're going to grow greater than 30%, which could even mean 31. The market was already expecting 32%. So that's a little bit of a disappointment. They didn't up their growth targets. They, if anything, decreased them from where the market was. And so you see that in this next quarter, they're expecting to grow 45%. But by the end of the year, they think they're only going to grow 30. So that means growth is going to be slowing. That's not that exciting. Plus, if you look at this for the first quarter, they think their margin's going to be 23%. This quarter, it was in the 30s. So margins are getting worse. Growth is a little bit weaker than the market was expecting. When you get a high-flying stock, that's what happens. It goes down like 9-10%.
Wow. You hit it bang on. Scott, I'll just talk a little from Citigroup here. They've got a sell price target, which is kind of unique on sell side for Palantir. They said echoing your thoughts, the results were far from flawless. Featured a number of mixed metrics, including a lack of new customer growth and surprisingly weak cash flow. Also, the trajectory of growth, which you've highlighted for 2021, implies a significant deceleration.
There you go. That's not what people see. They want to Zoom earnings where you keep raising your growth guidance by like 50%. You know.
Yeah. So that's Palantir.
So it doesn't mean Palantir's down and out, but it took some of the sizzle out of that stock for now.
Yep. Right. So that's Palantir. Now, for the main event, Scott, you've been doing some work.
WallStreetBets. So what I wanted to figure out is how can we maybe get ahead of this WallStreetBets and figure out some of these picks before they start running. So I'm going to take you through how we screened the list of what we got, what looks interesting, and then you'll know how, if you want to do it on your own, potentially screen for the next WallStreetBets YOLO trade. Because that's what we're all
This-
looking for, right? We don't want to
Yeah.
be at the tail end of the Tilray or the GameStop. We want to be the week before when it runs 200%.
Exactly. And the other way to think about it too is even if WallStreetBets doesn't get there, I'll tell you some hedge funds are like, I don't want to be the fucking guy holding the bag.
Yeah.
Right? Like this is a duality screen where in the sense that these things will start going up potentially irrespective of WallStreetBets, Scott, just because the right strategic thing to do if you're a hedge fund or your short bias is to exit your short bias. Fed keeps printing. WallStreetBets is like a roving gang of vigilantes seeking justice for stocks to go up. You don't want to be on the other side of that. Simple as that. Simple as that.
That's the beauty of one of the screening techniques we use is to look for short interest. That's what WallStreetBets look for. They want to really squeeze those hedge funds. Yeah. And so if hedge funds are getting more and more nervous that they're going to be next, they start closing those short positions. That alone makes the stock go up. So you could be wrong on the WallStreetBets, the next stock they pick, and you can still make good money on it.
Yep.
So first, let's look at what is WallStreetBets interested in today. This is as of 20 minutes ago.
Okay.
So the top ticker is Palantir. I guess because of earnings, whatever. Palantir has always been floating around in like the top 10. But now today it's a big chunk of the conversation. GameStop's still up there, but we can see the stock. That story looks largely over. It's not going back to 400 anytime soon.
No.
And then third is Tesla. Then we have AMC, Sundial, BlackBerry's still hanging around. Afria's down there. And then you get into, as far as the new ones I haven't seen in a little while, they have Neo they're talking about, Silver.
Yeah.
The space SPCE, the space, was that a SPAC or?
No, that's Virgin Galactica.
That's right.
Space,
yeah. Okay.
Right? Yeah. Virgin Galactica.
Riot blockchain. We got Snowflake in there. So a lot of this ones you've seen before, but the biggest movers have been Palantir by far. So that's kind of what they're looking at today. But now I'm going to take you through kind of how we screen these things. So the number one criteria you start with is you want to look at short interest. You want stocks with high short interest because that gives you the potential if WallStreetBets piles into these stocks and the stock price goes up, all these guys who are short have to cover, and there's not a lot of stock floating around, so they're going to push the price up a lot. That's what WallStreetBets wants. So we did a screen with our handy dandy Bloomberg on that sort of thing, and we said if the stock has a short interest greater than 25% of shares outstanding, we want to know about it. So I'll show you what that ended up looking like. So I think it ended up with 45 stocks, 50 stocks. And the way I screened it is what's the short interest? And then also what's the return in the last month? Because what I want to know is things that have a high short interest but haven't run already. WallStreetBets hasn't found them yet. So that's why I highlighted it.
Guys, this is a man who's thinking. This is a professor. This is him drinking his morning brew and that aha moment. Listen, everything doesn't have to be
I cranked up my brain a little bit, right?
Everything doesn't have to be rocket science here, guys, right? So you can use some fundamental metrics, but just simple logical arguments that, just simple logical thought process like this, i.e. I don't want a stock that's run. That means the sizzles come out. Simple, but brilliant. Important stuff.
So this is just two screening tools I use. One is the short interest, and then from there you break it down even further and say if it's run, I don't really want to go with it. So
Scott, I can't see that very well. I need you to blow that up.
Let me see if I can blow it up. Here we go.
Yeah, there we go. There we go.
Okay.
Good times.
So most of these ones that have run, 130%, 50% the last month, these are ones like WallStreetBets has already been on Workhorse. They've been on GameStop. The Tilray pump already happened. So you kind of throw that away. The one that I thought was interesting was GoGo, which I think is an in-flight wireless company. So it's run 40%, but if you see it's still close to the highs it was, and it has all those factors working out, like the options. We'll talk about the YOLO options next, but that one might be one to put in your radar. It hasn't. The pump may not be over.
Oh man, and GoGo is so it's a natural rocket. The ticker itself is a rocket, memeable.
Wouldn't that be amazing if GoGo just went GoGo?
Well, it looks like you're setting it into motion, Scott. That's
I
what
might
you're
be.
doing.
I might take a runner on it. But so then
Guys,
here's the
go,
other
go.
ones. We have a whole list. I think we're gonna put out an article on this later today, and we'll put the whole
Yep.
list in there so you can check that out. But it's things like Dillard's. It's basically like dead companies that a month ago hedge funds said these are dead companies. I think they're going to zero. But now it's a liability and they could go to the moon. And then any other ones, AMC's already played out. Regis Pump is already played out. Let's see if there's any more blue. Oh, so Blink Charging is one that people already like. It's an EV company, but it hasn't run in a month, so 9%. Basically, what you want to do is any of these you see, look at the chart over the last month or two. If it has a big little like mountain in it and then it went back down, the pump is over, in my opinion. If it doesn't have one of those and it's going nowhere or just going up slowly, it may not have been found by WallStreetBets. So that's why I like down here. There's certain ones that have been down. So I like this infrastructure and energy, IEA. That could be interesting. High short interest. It's been down 12% in the last month. So there's no pump there. So this will be helpful for you. Just kind of we did the work for you. These are the 43. Now to make it more specific, we looked at what options WallStreetBets guys may be buying.
And explain this again, Scott. So once you've identified, so I'm gonna add up the pieces here, right? So Scott's doing this very methodologically, like he's identifying we want high short interest stocks, right? These are number one. Second, what he's translating in basically a number is to identify that it hasn't gone up that high, because if it's gone up a lot in the last month, that would indicate that we've already had a bit of short interest coverage, or
you've had short interest coverage, or you've had a group of retail investors flood into it and push it around, and you want to be ahead of all of that. So the next thing I'm going to talk to you about is screening for options, but this is kind of doing the same thing, just to say WallStreetBets guys have already been in the name. Potentially it could show if someone's starting to get ramped up and they're throwing a lot of money in those YOLO options. But for me, a lot of those just showed me that, yes, these already were stocks that ran and the options got bought up over with. So I'm gonna show you what our screen came up with. So you can see there's multiple tickers in here because these are each a different option. So any company might have lots of options that are popular with WallStreetBets. So one of the biggest ones is you see GME is GameStop. Lots of GameStop options.
Scott, you may need to blast that bigger. I can't see it right now. There we go. That's the.
See, so look at all these GameStop ones. They're big. So like what we did is here's what you do. YOLO options only, which means they expire less than 30 days from now. I went even 1 to 2 weeks. This is generally how WallStreetBets plays it. And then you have way out of the money. So these have a strike of $200, $150. What is GameStop at? $50. That works. You also have open interest. You want to see that people bought a lot of them. So they're a popular bet that kind of tells you that this WallStreetBets strategy is playing out on this stock. And you see that again with GameStop. Look at there's 4,500 options is outstanding, 10,000. So this is the big one. $800 strike expiring on the 19th.
Wow.
That's not going to work out so well.
Bag holders on that number, 800.
But so you look at some of these other ones, like this WKHS, that pump has kind of happened already. So some of this just tells you if a pump already happened, yes, people already bought these options and they aren't going to end up making them any money. So I want to look for, like, this is why I mentioned GoGo. See, GoGo has 2, so people are starting to do that. This is expiring on the 19th in 3 days, $30 strike. There's 4,000 outstanding, and it's decently out of the money. So that shows you that people could still be playing GoGo, basically.
Interesting. And what's GoGo's share price right now, Scott? Maybe I can check quickly. Let me just GoGo.
Yeah, can you look it up for me?
Yeah.
I'm gonna see what else.
So it's GoGo US, $15. Yeah.
So 30 way out of the money. There you go.
It's gotta be double.
Best Buy is a popular one too. There's a few options here, and then Blink. See, Blink. There's 3, but not very many. I mean, when you look in the scheme of things, you have 10,000 outstanding for GameStop. This is 1,500, 1,000. Still not nothing. The way we screened is if open interest, the amount of options that have been purchased is over 1,000. We want to know about it.
Guys, this is we're just giving, this is the best of all things coming together. We're using the horsepower Bloomberg to bring that to all you guys and our thought process here. Arez, thank you, man. Arez says golden info you guys are bringing. Guys, if you're finding value, you're feeling what Scott is dropping, and this is real quality stuff. And Scott, we're gonna put out an article on Grizzle.com, right?
Yeah,
I think so.
Yeah, so check our social channels. We'll let you know when that's out, and you can see this whole list. Tom, what's TRIT? What's that company?
TRIT, I don't know that one.
No, I don't either. It has a lot of outstanding.
Tritaras, a fintech company, offers commodity trading and trade finance platforms that connects enables commodity
And what's
traders.
the current price?
Current price, it looks like the stock's been battered. Current price is $7.81.
There you go. See, look at it. There's 15,000 YOLOs on 15 strike. So
Yeah,
someone's betting this thing's about. Did it have a pump and then it bounced back a bit?
Yeah, kind of like I don't know the history enough. Like it looks and feels like an RTO, Scott. Like or in the sense that it's just like the stock price was doing nothing in 2020, and then it got really volatile, and then it fell like a bomb. But it's a U.S. ticker, so there's that. Yeah. So
this is really a good place to start. If you have what options WallStreetBets people are buying and where the short interest is, you can both try to get ahead of it, or if you find one that's already popular but it's still going to run, you could also get in. You won't be too late. So it's either or.
This is great stuff. Iraq Rocks is asking, do you get this info from Y Charts? Scott, give it to them.
Bloomberg. Sorry to say. So the short interest you can get, that's available. I think you could even Google the ticker and short interest percentage. Yeah. And maybe like Y Charts, which we use, has that as well. So that's easy to get. When it came to screening for the options, unfortunately, you need the big Bloomberg terminal to do that. But so we'll do this every maybe week or so to kind of help you and update that article so you can see, you can pick and choose what you want to look at.
Yeah, like let's be frank here. It's not worth the money. Like we use it. So most of our stuff, literally 90% of our day is just playing around on Y Charts because it's simple, it's great, it's easy to use. The other 20% is because we're specialized in a lot of things, specifically commodities, very specifically commodities and options. And those are the things that and we like to shit post on everyone back on Wall Street.
Yeah.
we like to send them DMs and fuck around. You know what?
We're persona non grata on Bloomberg. They don't block many people on Bloomberg. They blocked us. But if you're playing in options and you want to do analysis, you really need a Bloomberg because there's just options is early days, right? Most retail investors have just found options through Robinhood, but as far as analytics, there's not much out there. So Bloomberg is the gold standard.
William's asking, where do I send my tuition check? Keep it, Will.
Yeah.
Keep it.
You
man.
need it, my friend.
No, dude, no, don't, man. Listen, that's why Grizzle's here, man. Just
all you got to do is when we come out with the special edition hats, if you want one, hit that buy button.
Yeah, please. The special edition hats we've got the order out. We got the order out. They're hot. We got a couple. We got the classic, which Scott is wearing, and we got the special edition Diamond Club. All profits, everything
Diamond
excess
hands.
of cost. Diamond hands. Everything in excess of cost will go to a charity, both Canadian and U.S. So that's what'll happen. So yeah. So William, keep that tuition, man. That's Scott. That was a great breakdown. And so, guys, when we have the article live, check on obviously check on the Grizzle Twitter. If you're not follow Grizzle Twitter because that's our masthead. All articles, all official articles leave there. If you want the sauce, the banter talk, the shit post, then follow Scott and I. But big research efforts always come out of the Grizzle. We'll obviously retweet it, but follow that, and we'll aim to have the link in here in this episode as well. So there's that. That was a killer breakdown, Scott. Killer. Yeah, guys. Hopefully, Rez, thank you, everyone. Iraq, Ian, what is going on? Ian, so I'll have a chance to have a deeper dive into the earnings. Bottom line is the stocks had a phenomenal run in Sierra Metals, phenomenal run. There are very few high quality copper companies right now. Copper is hitting all-time highs again. Every week it hits a all-time high. All things equal, there are very few options in copper land to own quality assets. You want to own quality assets every day, all day. We are in the age of the electricity dream, Scott, EV vehicles. So we were talking about earlier in the show. If you weren't tuned in, then please rewind. We'll talk about natural gas. We're big believers in natural gas being a part of the solution for climate change, and and it's a pragmatic way to bridge into the future, shut down coal. But at the same time, we have to be pragmatic in understanding and acknowledging that EVs are not going anywhere, Scott. They're here to stay. And that is going to have an impact on the supply chain that feeds electric vehicles. And that is definitely something we want to highlight and identify. And we feel copper is an important component of that, arguably the backbone of that. And then you have all the metals that go into the electric vehicle. So all very good. Jim, what's going on? I want one of those yellow toques with the Grizzle logo. Listen, we're going to get, you know what, Scott, Jim, you know what? I think we'll have to wait till next fall season. We just fear that the toques will come at the exact wrong time, Scott.
The sun will come out and everything will melt, and then the toques arrive. Dozens of them.
Yeah.
And then we're going to get into the squirrels. The squirrels will be running around wearing them.
Yeah. You know what? We want to make sure, listen, if there's a better hat collection coming out next winter, we want to make sure you guys are swagging, man. We're dressing nice, swaggy style. Yeah. Hey, have we put a bid in for Swaggy Man yet, or what's his website, Scott?
Oh, Swaggy Stocks. Hold on, I have it right here.
I'm gonna send him a quick
Swaggy Stocks. There he is.
Yeah, start with.
He looks like the WallStreetBets guy, actually. He did.
I know. I like his vibe, man. He's on Twitter too, man. Send him a 10,000 first bid. Something.
There we go.
Let's initiate
we'll get it
contact. Started. He can still run the data. I don't know. Yeah. There's got to be something out there. Guy, respect the people doing crazy stuff, man. Do not pay for a lick. Do not pay for nothing. No. Yeah, guys. Yeah, you know what? We'll do sick kids for sure. You know what? We're talking about charities. We'll do sick kids. An institution here in Toronto. Institution. One of the greats, man. If you have kids, you've probably seen sick kids at some point. Hopefully not, but if you're ever like worried late night, whatever, that's the way it goes. It's a great place. And yeah, man. What else? So
we had a question about just gold and silver. I was just looking quickly at some things. It's interesting what's happening with silver because we've talked about that gold silver ratio, how it blew way out right early in 2020. We were looking for it to come back in. It keeps coming back in. I can just tell by looking at some of the gold stocks versus silver. So I didn't know if you had any more insight on if there's some WallStreetBets hype going on in silver that's helping that ratio keep going down, because we know the fundamentals that are making gold weak. I'll show you right here. All you need to know is, so this is the treasury rate. As real yields go up, which part of that is the yield on the treasury, you can see that since late January, it's been going up. So that explains why it makes it more expensive to hold gold. Real yields go up, gold kind of goes down. So that's what's been playing out in the last month.
Yeah, and it's kind of interesting, right? In the same backdrop, arguably Bitcoin should have been going down as well, right? Right, because same store wealth argument, all those sorts of things.
Yeah.
But
I think there's something else, maybe flows.
Well, it really is. I categorize it in a couple different ways, right? So gold is probably let's call it the big boulder that takes a lot of effort to move, right? In the sense, in this big room, right? You've got, let's just call it, you got Bitcoin, like a comet, you've got silver, and then you got gold. Gold is almost the immovable object here in the room, right? And so we're in an era of high liquidity sitting everywhere, lots of cash. If I was any investors thinking together, not just WallStreetBets, I'm just thinking in general, you corral around the asset that can be moved the most quickly, right? Which has been such a powerful force for Bitcoin, the size, right? If ultimately Bitcoin is going to be an asset that rivals gold, it's a fraction of the market value. You go and try to push that thing, right? It's just the law of gravity here. And then on the other side, you've got silver, right? So, there's a couple ways to think about this too, Scott. So real yields going up imply that inflation isn't going up, Scott, right? And I think that would be a wrong assumption. So I think what you're seeing right now is nominals go higher, but ultimately, if you were to not what what the U.S. is printing on inflation, and I think they're going to get a lot
of. So you have your own basket, right? You're not just looking at the whatever the government put together.
Yeah. So all things equal, I would say, listen, the critical thing here is have an understanding of where inflation is headed, right? And that's critically why yield. You start to demand more yield if you feel inflation in the system. And if there's one thing, if you follow Twitter and follow it, the banter around Twitter, all the things that keep getting posted is prices going up, prices going up, prices going up, but it's not being impacted in your inflation basket. So, and then you got the money that can move these other boulders quicker, right? So that's the other side of gold. So, but when you think about big asset managers, Scott, that you're going to find a few that are going to potentially get sexy and get into Bitcoin. I would say that would be interesting because they've never even got partially sexy, if you will, and got bought into gold. So you've got a lot of bases that a lot of companies, people, etc. I would say it'd be fantastic to assume everyone can leapfrog from owning all cash, Scott. Sorry, your bond component and your equity component, and then waking up one day and saying, look, a person who's never owned gold, an institution that's never owned gold. That is basically all institutions around the world. Like, gold is underowned everywhere. So waking up one day and finding that same person who is like kind of risk adverse to say, listen, I don't know about this whole insurance thing, to then jumping immediately into Bitcoin, I think you're going to see all of these things go up, right? And arguably maybe you do, right? But and that's why Bitcoin is so luring, because if that person was just to put, let's call it, just say they wake up, Scott, an institution says, oh my God, we got inflation, yields are going up, indicator of inflation risk, okay? Second, I need to protect myself. I need to own some kind of inflation hedged asset, call that gold, call that silver, call that Bitcoin. Now, let me just say, I'm going to go 10% is what my insurance weighting is going to be. I'm going to go 9% in gold, 1% in Bitcoin.
Yeah.
Sorry. So you put 10% of your insurance allocation to Bitcoin. Which asset moves higher on the base of this very large institution getting punchy with insurance?
Bitcoin. But that's so. For everyone out there, I've been reading some of the latest research on how the market works now, and that goes right into Bitcoin, where hodlers. There's a lot of Bitcoin holders out there. So if there's a lot of people holding and not selling, then small changes in flows into the asset can move the price around a lot, because there's not actually a lot of supply floating around the market. And so that could be happening because we got a lot of people who believe very strongly in that asset, in Bitcoin.
Yep.
And then we have all these big institutions that are starting to wake up, and the general public is interested in it.
100%.
That's the puzzle.
Yeah, no, that hodler, and that's always been it's interesting because, the store of wealth by definition, Scott, is a hodler thing, right? When you think like Indian culture, okay, well, just keep your gold. Don't be like always going to the market selling your gold. Keep it. You'll need it for a rainy day.
You always have it. You do a lot of other things, but you always got your little pocket of gold under the rainbow.
Exactly. And that hodl, the culture is really very synonymous with store of wealth assets. But it was never called that before. It was just like, listen, just save it for a rainy day. And so
now it got memed, so now it's cool.
Now it got memed, right? And so you got the power of the meme, right? And I know a lot of like boomers are writing about it in all these big publications. Oh, meming as a factor. Listen, like, if you were asleep at the wheel, and most big asset managers were, we know they were people we were talking to. They weren't getting the revolution that was happening. You got to sell a story, right? And that's simple as that. And if anyone can talk about that, it's Elon. Look what the hell he's done with Bitcoin, with Dogecoin, and all this stuff.
Is it Dogecoin or Doggycoin? What do you end up with?
Yeah, guys, what
is it Doggycoin or is it Dogecoin?
I think it's Doji. I think, guys, give us a thumbs up in give us a thumbs up.
Smash those likes if it's doggy coin.
Don't smash it down, but tell us if anybody knows the exact pronunciation.
But did you see Elon's tweet yesterday? He was basically putting a floor under it. He's like, if you're selling your coins, I'm buying it.
I didn't get it because he was like, there's a lot of like large whales they need to unload, but then he's gonna buy it. And
yeah, he just went once over. Usually he's like, doggy coin, exclamation point. But now he's like, if you're selling, I'm the buyer. Don't sell because I'm in it already.
I don't get it. I don't get anything. Anyway,
but anyway, you guys, tomorrow we're gonna have an interesting conversation on interest rates and yield curve control. You saw our strategist Chris Wood wrote about that last week. So he has another piece talking about that more, and that has big implications for gold, silver, Bitcoin, all this stuff. So definitely check that out tomorrow. We're gonna talk even more about the potential of the government controlling interest rates.
Wild. And guys, if you're in Texas and vicinity, we wish you well, man. It looks serious business out there, Scott. I don't know if you have buddies, friends in Austin, that area, but it looks like a very crazy setup.
There we go. Doji.
Doji. Yeah, I think according to Barstool CEO, listen, man, he's a trendsetter, that kind of thing. Anyways, Dave Portnoy, if anybody's going to know how to say the right pronunciation, it's Dave Portnoy. And even if it's not, he's the guy who'll change the fucking pronunciation.
Yeah, it'll be pronounced however he does it.
So if he's pronouncing it Doji, it's Doji.
Yeah, it's Doji. We'll stick with Doji until he changes it to Doge.
Doge, yeah, man. Oh, yeah, okay, so it's Doji. Yeah, that's right. We got Avon Fitz, not E at the end. Doge. Oh!
See, so we got one person saying Doge and one saying Joji, so we're at a stalemate now. We need a third person to weigh in.
Well, we can definitely say it's not Doggy, Scott.
No, it's not Doggy. Doggy's out the window now.
It's not Doggy, so at least we got that sorted. Guys, everyone, thank you for tuning into another great Grizzle Live. If you have not retweeted, share a friend, be a friend, share it with a friend, and hit the likes up on Twitter, guys. We're trying to get this. Man, it's kind of crazy, man. We watch a lot of other financial networks. Some are interesting. Majority are not. We believe we're in the interesting category. And if you're feeling that, share it up. Let people know. Grizzle fam is here, guys. Grizzle fam.
We appreciate it. You guys are the best. All right, that's why we're doing it.
Thank you, guys. Raph, thank you, guys. Truly, we're here to grind it every day. We're locked down while you're locked down. We're not going anywhere.
We'll see you tomorrow at lunch. Let's do it.
Let's do it.
All right. Later, guys.